This video we're going to be talking about understanding your mortgage statement line by line. Okay, my name is Sonia. On this channel we talk about everything real estate and finance. So today we're going to be breaking down something that every homeowner gets every month after they pay their mortgage. Okay, but most people never fully understand what it is or how to read their mortgage statement. So if your mortgage statement shows numbers that you don't understand, or if you ever wonder where is your money going when you're paying off this mortgage every month, or if you barely really understand how your balance is moved from one place to another, then this video is for you. Okay, so the first thing we're going to be starting with is why your mortgage statement matters. So that's the first point for this video. Why do you really think your mortgage statement matters? Why do you think your lenders are actually going to be giving you these statements every month? All right, so most people look at their statements, but every month, right, you're going to actually see them, and some people don't even look at it. They just know that, oh, my mortgage statement came. They don't even look at how or what it is. They just know that, I paid my mortgage and that's okay, everything is going to be fine. No, when you look at your mortgage statement, you should be able to see the payments amount and everything that how it was broken down. Okay, so this document will answer every question of yours. If you have any questions that you want to ask, or you're thinking, oh, how fast am I paying down or building equity? How fast are you paying down your principal? Did any of my taxes or insurance go up? Yeah, you always have to pay attention to that, because that's the reason why your monthly payments actually change, right? Your taxes, your insurance, and any other thing that you're going to be seeing your escrow. Am I paying too much fee? Did they add any fee during this month or something? When will I be able to pay off my home? How long will I take to finish this home? If I make extra payments, if you are making extra payment, how long will it take for me to finish this home? So all those are going to be in your mortgage statement. And you could equally ask yourself, in case you're in a hard time, is it a good time for me to refinance? If you want to, if you actually just want equity out of your house, do I currently have equity? So all that is going to be explained. You just have to pay attention to it. So let's dive into the second point for this video, which is going to be the top section of your mortgage statement, which is your loan information and what you're actually going to be seeing. So this is the loan information summary we're talking about. Okay, so this is what is usually included in your loan information summary. You're going to see your loan number. Your loan number is going to be your unique ID, that number they gave you when you borrowed that money at that time. So every time you call customer service, make sure you have this loan number available, because that's the only way they're going to help you faster. Maybe you can give your name, but this is unique to you, so it's going to be easier to pull up your info. Okay, the second thing is going to be your property address. So your property address is going to be on that loan information. Okay, and then the third thing you're going to be seeing is, I remember that is going to be the address that is associated with your loan. All right, the third thing you're going to be seeing there is your due date. Your due date is just when your payment is scheduled to be taken off, if you do automatic payment, or when your scheduled payment is due, if you actually manually pay up these monthly payments. The fourth thing is going to be any outstanding balance, your principal balance. Okay, so this is the amount that you still owe in the loan. When it comes to your principal, it's not initially only the only amount you owe overall, because remember that when it comes to your mortgage, there is principal and there is interest. Your interest is most likely not going to be shown on that section, but you know that even if that's just the principal, that's not the only thing you're going to be owing the bank. Okay, because you still owe them interest. All right, but that you're going to be seeing your outstanding principal balance. Number 5 thing you're going to be seeing in this section is going to be the interest rate. So you're going to be seeing your current interest rate at all times, right? So if you had logged in a 3.5, a 3.3, a 4, a 5, a 6, even a 7% interest rate, you're definitely going to be seeing your interest rate at that in that section of the summary. The sixth thing you're going to be seeing is your escrow status. So your escrow is going to show any activity, right? Anything that is going into your escrow. It could be your taxes, your mortgage insurance, your home insurance, anything that they are going to be collecting from you toward paying off your insurance or your taxes. It's going to be located in your escrow, which we are going to actually really explain or tell you more about the things that you're going to actually find in your escrow as the video goes by. And then the number 7 thing you're actually going to be seeing in this section, which is your loan information summary, is going to be the maturity date. And what is your maturity date? The day that your last payment is actually due. So if you choose a 15-year term, you're going to see how many payments you have left. You always see how many payments, right? 200. Okay, so let's say you bought your house, you've paid for the whole year, you're going to see 300 and something. If you just started, you're going to see 300 and this left. So that's actually when they're expecting you to make the last payment towards your mortgage, which is going to be your maturity date. That means you're done and you fully own the house. All right. The second or the third point for this video is going to be how your monthly payments are broken down. So you're going to see a whole section of these in your statement showing you how your monthly payments are broken down, and these will actually be divided into 4 sections. You're going to have your principal, you're going to have your interest, you're going to have your escrow, and any additional fees that is going to or they're going to charge you. So let's talk about the first thing, which is going to be your principal. Remember, we're talking about your monthly payment breakdown section. Okay, when you talk about your principal, this is the amount that reduces your home loan balance and it builds your equity. So in the earlier years, you're going to actually see small amounts go towards your principal. So don't freak out. Don't say, oh, I've been paying a lot, why am I not seeing enough money here? Well, because the first few years you're actually going to be paying for interest. So the second thing you're actually going to see is going to be the interest, and here this is the fee you're going to be paying the bank for loaning you money. Okay, it's the cost of borrowing. So you are going to be seeing more of the interest in the first few years than in the later years. So as you make those money payments, the first year, the second year, the third year, the fourth year, the fifth year, know that your interest or money or the amount going to toward your interest is going to be way higher than the amount going toward your principal. The third thing you're going to actually see here is going to be your escrow payments, and this is money set aside monthly for them to be able to pay your bills. Stuff like taxes are paid at the end of the year. Okay, so if they wait all the way to get those taxes, or let's just say they don't put it into your escrow and say pay your taxes at the end of the year, a lot of people might not be able to pay their taxes because, hey, it might be way higher than they expected. So they try, at most mortgage companies actually get these taxes deducted from your monthly payment as the months go by, so they should be able to pay your taxes for you during the end of the year. And that is why a lot of homeowners who have mortgages don't actually see that, they don't actually send them their tax straight up. If they have a property, their mortgage company actually pays for those taxes and then let them just send them the information just to make sure that, hey, this is how much tax we paid for you during the year. Okay, because hey, everybody wants to protect their investment. They don't want no lien on that house because you failed to pay for taxes. So they want to be able to make sure that taxes are being paid as you still own or owe them money for that house. All right, so that's the reason why you see stuff like money for taxes, and they take it every month. So home insurance as well, they want to be sure that the home is insured, so that's why they're going to be making sure that they take money from your monthly payments to put it towards your home insurance, so they can be able to pay for your home insurance. And you're going to see this in your escrow. And for those who equally have mortgage insurance, if it's applicable to you, might be for people with FHAs or might be PMIs. Those with conventional loans that don't pay up to 20% most likely will have PMIs on their mortgage, so you're going to see this toward your escrow. They will equally take an extra amount from the monies you pay monthly to pay for this mortgage insurance or private mortgage insurance. It's two different things. One is for FHA, the other one is for those with conventional loans. All right, and they are just making sure they pay up your bills for you. And the last thing, when I said, could be any additional fees. So you can see a section for additional fees, okay? And these additional fees is going to show stuff like late payments. If you make late payments and they charge you extra for the late payments, that's why when you look at the very top, you would see if you pay before this day, you're going to pay your regular monthly payment. If you pay after this day, this is how much extra you're going to be getting. You're going to be paying extra, so you're paying late fee and it's going to show under your additional fees, okay? The second thing you might see under that additional fee section is going to be property inspection. So let's say this homeowner has this home but missed first payment, second payment, and then the mortgage company is wondering, is somebody actually still living in this house? So let me come and inspect. So if they come and inspect your property because you missed payments, well, they're going to charge you for coming out to inspect that property. So keep that in mind. So for those who are actually having hard times and missing their payments, know that you could be charged something called the property inspection fee, okay? And you're going to be seeing that additional fee, those fees under the additional fee section of your statement. All right, the third thing you could actually see under this additional fee is if you have insufficient escrow funds, okay? So if maybe taxes went up or something happened and your escrow funds are not enough, then they can charge you extra just so they can cover up for those funds that are not enough. And the last one is if there was an escrow shortage. If there was a shortage, maybe they paid off your taxes, your home insurance, and there was not enough money, well, you equally have additional fees just so you can make up for those fees, okay? So let's say your monthly payment is like $1,900, okay? So on this section, you're going to be seeing something like this on the statement, okay? It's going to look like principal, you paid off your principal, this is how much going towards your principal, $450. Then your interest, $1,100, your escrow, $350, and this adds up to the $1,900 that you actually paying a month, okay? So they can equally go if you're having extra, if they're charging you extra, or if you're making extra payments. If you're making extra payments, they're going to actually show you where the extra payments went to, okay? So they're going to allocate every payment. So if your monthly payment is $1,900 and you choose to add $100, $50, $10, it doesn't matter. Even if it's $5, that $5, and make sure you insist it goes towards your principal. If your intention is to pay your principal, okay? If your intention is not the principal, then you can as well not worry about it. But if your intention is this $10 I'm adding should go toward my principal, then insist or make sure you tell them about it. So you're going to be seeing that $10 apply to your principal if you make that extra money, okay? The fourth point for this video is going to be your principal versus your interest over time. All right, so the first year, most of your money is definitely going to go towards your interest. That's because you are going to be paying upfront the cost of borrowing, okay? So small amount equals principal, higher amount equals interest. So by year 10, principal increases and interest decreases. You might not see a lot of changes, but it's way better than your first year, your second year, your third year, okay? By the 20th year into this mortgage, you're actually going to be seeing way more difference, okay? Most of your money is going to go towards your principal than your interest by year 20, and that's how you're going to be able to build up equity rapidly. All right, so the first year may be slow, but the later years you are really going to see the changes grow quickly. All right, number 5 point is going to be the escrow account. I said earlier that we're going to be discussing things you can actually see in your escrow account, okay? And the escrow account actually confuses some people. So what is an escrow account? An escrow account is where the bank collects you money monthly to be able to pay off your property taxes, your home insurance for you. They do it on your behalf. They collect the money on your behalf and they pay for these different things for you. And items that you could see in your escrow account are stuff like your property taxes, your home insurance taxes, your mortgage insurance, your flood insurance. If you live in a zone where they have flood, they could equally have other types. Maybe in places with wildfire, you could have different insurance for that. Those places that have all those earthquakes, you can equally have different insurance for that. So all of these are going to be found in your escrow. And for those who did not make enough down payments, you're actually going to be seeing stuff like PMI in this escrow, okay, for conventional loans. All right. And for those who live in areas with HOA, they could equally charge them extra if they don't directly pay to their HOAs. They could charge them extra for them to be able to pay up these HOAs. Okay, so keep in mind that your escrow can actually change from year to year. Okay, that is because if your taxes or insurance go up, that is definitely going to be going up as well. Okay, so if you see changes in your escrow, don't be so, well, what is happening? Just, you can either call them or you can read the statement. Okay, and if you really think you want to just call and verify, that's a good thing to do as well. But most likely your insurance and your property taxes are definitely going to go up, so you're most likely going to see a change in your escrow amount, and maybe this is equally going to be affecting your monthly payments. Okay, so maybe at the beginning you're paying something like $1,400 or $1,900. As the years go by, your mortgage can equally increase. All right, so this is just a breakdown of what you're going to be seeing in the escrow section of your statement. Remember, we're talking about your statement line by line. The 6th point for this video is going to be the transaction history. So this transaction history is going to be showing you stuff like any payments that they have ever received. Okay, so your last payment received, the payment date. So if your monthly payments are due on the 1st, but you made the payment on the 20th, it's definitely going to show the 20th. It's not going to show the 1st because that's when your monthly payment was due. Okay, so you're going to see when you make that payment or when the payment was actually processed. You know, sometimes we make payments over the weekend and then they don't process it until a work day. So yeah, keep that in mind. You're going to see how much was applied towards your principal, how much was applied towards your interest, how much was applied towards your escrow. If there were extra principal payments made, they're going to equally break that down in your transaction history. And if there were any fees that they were charged, maybe you made a late payment, then they charged you a fee, you're going to be seeing that. You're going to be seeing any adjustments if there were any adjustments in your monthly payment, if there were any insurance paid out, if there were any taxes payment. And these taxes, most likely you're going to see it at the beginning of the year, because of course the beginning of the next year, because of course, let's say we're in 2025, they're most likely going to be paying for your property taxes in December of 2025. So you're going to actually see your statement in January explaining what happened, how much they paid off for your taxes, and then they actually have to begin collecting monthly payments for the month, from the month of January, so that all through the way, so that they pay up your tax for 2026. Okay, you're equally going to see any escrow balance changes. Okay, so all these things, you're going to see them under your transaction history. So please, when you're looking at your transaction history, make sure that every payment is applied correctly. If you take a look and it's not applied correctly, please make sure you give them a call so that you and them can be on the same page. If you send in an extra payment towards your principal and it wasn't applied correctly, if they send the money instead to your escrow instead of your principal, please call and talk to them so they can position the money or redistribute the money where it was supposed to go. Okay, make sure no unexpected fees are added. So if you see them and you see that there were some fees without you knowing where it came from, please make sure you call them to verify how did this end up here. So that's why you are supposed to be reading your mortgage statement and read it very well and understand it. Okay, that's why we're making this video. So the number 7 thing or 7 point for this video is going to be your year-to-date summary. And your year-to-date summary is basically going to tell you from this January to December, this is what we receive and this is how much added up. So the goal of this section is for you to understand your mortgage financially. Okay, so remember that you are going to see something like your principal year to date. So if they applied 450 January, 450 February, 450 March, you're going to see it add up to the end of the year for you to know how much was added. So you're definitely going to see at the end of the year how much you were able to pay down your mortgage. That's why you have the year to date. So if you make the calculations, add all the math and it doesn't add up, please give them a call and ask them, hey, I did the math and it didn't add up, because I'm seeing that you collected 450 in the month of January, 450 in the month of March, April, May, February, and this is not what I'm seeing here. So make sure you read the numbers, do your own calculation. Okay, you're going to equally see the interest you paid. Okay, how much you were able to pay the lender for that year on the cost of borrowing. So you're equally going to see the year to date on your interest as well as the total escrow money they are going to be collecting from you to pay for things in your escrow, which is going to be your tax, your insurance, your home insurance, your mortgage insurance, or any other additional things that are going to be in your escrow. You're equally going to see your year to date for your escrow as well. All the totals of the money, you're going to see them. And why does this section actually matters? It helps you track how your equity is growing and how fast it's growing. Okay, it helps you during your tax seasons. It equally shows you how much interest you are really paying for borrowing the money to buy that house. Okay, and it equally helps you decide if you want a refinance to save you money, or if you want a refinance to get some money out, or anything you want to do for during if you just want to lower your interest rate. All this will help you understand if you want to actually refinance at the end of the day. All right, so the number 8 point is your current principal balance versus your payoff amount. This actually confused some home buyers, so let's be clear about your current principal balance versus your payoff amount. Your current principal balance equals to what you owe today. By today, I means like this day. Okay, remember that your interest, they charge you interest every month. Remember, they charge you interest every day. So when they're giving you that balance at the end of the month, you're going to see your interest is accruing every day. Okay, so daily. So that's why your payoff amount is always going to be different from your current principal at that moment. Because if you decide I have the money to pay off today, let's say you have a 30-year and 15 years into it, you have all the money, you're not going to pay the interest for the rest of the 30 years. So that means they're going to be able to calculate your principal today plus the interest that you're only going to be paying to that day. Okay, not the rest of the 30 years, because remember the initial agreement was I'm going to be paying this interest for 30 years. So if 15 years into it you have all the money and you want to pay them off, they'll definitely not stop you from paying off your mortgage. It's just that the remaining of the 30 years you might likely not be able to to pay it off, because if I pay in 15 years, I'm done. So the next 15 years I own the house. Okay, so your current principal balance is going to be what you owe today, but if you paid off the loan today, that's your pay off amount, which is principal plus interest up to the pay off date plus fee. Okay, so that's what I just explained. So the difference is, because interest is calculated daily, the payoff quote expires maybe a few days or a few, I don't even think it's up to a week. Maybe they can tell you if you pay off bits before this day, right? Have you ever seen where you go to get a quote from, maybe you want to book an airline, and then they give you a code and tell you that if you pay within these hours, you're going to have the same amount. If you pay after this, then you have to call to recalculate because the code changes. That's the same thing that happens. So it changes as the days pass by. The code equally changes. So that's why you can only be locked in for a couple of days, or at most a week, or maybe 2, depending on the lender. But your payoff amount is determined during that little period window. So if they give you the code and say pay by December 10, if after December 10 you don't pay it off, you're definitely going to call to get another code, because that code no longer applies to your payoff loan. All right, I hope that makes sense. Then the number 9 point is optional add-on you might see. Okay, so that's the 9 point for this video. Optional add-on you might see. Depending on your loan, your statement may include stuff like PMI, which is your private mortgage insurance. And like I said, if you have a conventional loan without paying up to 20%, or you can have a mortgage insurance premium, which is for people that have FHA loans. Okay, late fees if you miss your due date plus your grace period, that's something totally different as well. And suspend account as well, if you made partial payments and the payments were not enough, so they kept those partial payments somewhere and say, okay, when next you pay, we'll add it until it's enough for us to put it on that one of the things. Maybe apply it to your insurance, or you apply it to your taxes, depending on what they want to apply it for. If you made any partial payments, is going to be in your suspense account. Okay, and some other things you can see is if you have an ARM adjustment notice, you're going to be seeing the rate change here and why it changed. All right, and the next thing, which is a 10 point, is the customer service section on your statement. The customer service section is very important. You're going to see stuff like their numbers, their mailing address for payment. If you don't want to make an online payment, you want to write a check, you can still do it. So you will see their mailing address where you can mail your checks to. You see escalation contact in case you have something you really need it escalated. You'll see a contact that you can reach out to them. Okay, you see house counseling information. If you ever need somebody to counsel you on, maybe you're going through some things, you're unable to make payments on time, and you need somebody to call to talk to, you see a house counseling information. You equally see something like error resolutions instructions. Okay, requests for information procedures, stuff like that, you're going to be seeing in this section. All right, so this is to make sure that in case you ever have a problem, a sudden problem, you can be able to reach out to somebody. Things like unexpected fee, a missed payment, maybe you made a payment and they allocated it somewhere wrongly, and then it's time for you to pay and you're like, I paid, and they'll be like, no, we did not see it. So you can actually call to talk to somebody. That's why this contact information is there, so you can actually be able to rectify those kind of issues. Okay, maybe you had an escrow shortage and you guys want to work it out, or insurance not updating. Maybe your insurance was not updated, maybe you switched from one insurance company to another and then it wasn't updated, something like that, or maybe you transferred your loan from another company to another. So all those information helps you. All those things you can actually be able to get them rectified if you know who to contact, where, and how to get these things sorted out. Okay, and The last thing, so the second point of why you need this you actually need to know this contact information is if you have a quick communication and you want to prevent any late payments. Let's say you have a little bit of problems, you are going to be paying for your payments, but you might not be paying it on time, so you might equally want to call and get all these things fixed. They might equally have some technical issues, maybe sent in your payments and they didn't see, like I just said, or you just want some information from somebody. You can actually call them as well. Okay, so the last point for this video is going to be how to use this statement to save you money. So how can your bank statement actually save you money? So if you are sending in your payments, you're going to equally see those payments, extra payments on your bank statement as well. So if you're paying extra towards your principal, then you're going to be seeing how much those extra payments are actually going to be bringing down your principal. So I mean, you're going to be happy seeing your principal come down, because that means you're going to be able to pay off quickly, right? The second thing, or how your statement can save you money, is check for escrow errors. If you have some errors in your escrow, you can actually rectify them, especially if you're reading them. If you're not reading them, you might not be able to find it, but if you're reading them, that means you can actually rectify these errors. The third, it's for you to be able to compare when refinancing options are available for you, or if you actually just want to refinance, what are the options you actually have, as you can see your equity build up. Okay, the fourth thing is reviewing your insurance premium. Sometimes your current company actually has higher insurance premiums for you, so you can actually say, oh no, I might not want to go with you, I might want to shop around for something else. So if you're not reading, you're not going to know that your insurance premiums actually went up. So this can save you money. If you know that your insurance premiums went up and you're not willing to pay for those high premiums, you can decide to shop around for someone else. And yeah, just make sure when you're done shopping around, just call them and tell them you switch from one insurance company to another, and they gave you a better quote than what you already have, so they can adjust it. Okay, the fifth one is you being able to track your payment history accuracy. So if you're able to track it, make sure your payment history is accurate, I mean, voila, why are we there struggling? If you're not reading it, might be they missed one of the payment, they didn't apply something well, something went wrong, you're not going to notice it. Okay, and then you might take years to even realize it. So make sure you're reading your statements every month. And the last one is to watch for PMI/MIP remover. So if you're reading the statements, you're going to be able to know when to actually remove your PMI, or you can even realize, you can even say, oh, this is how far I've been paying this PMI, this is how far I've paid down my principal for conventional loan. Okay, for conventional loan, this is how far I've paid down my principal, because for conventional loans, if you don't make 20% down payments, you're going to be paying off PMI. So if your principal goes down all the way to 20%, then your PMI can actually drop off. So you're going to be able to monitor how much principal you've paid and how much they can actually take off, how fast you can actually take off this PMI from your monthly payments. Okay, so I hope by now you've understood how your mortgage statements is explained line by line. If you have more, if you're still guessing, then please, when you're done watching, go back and rewatch this video so you can actually understand. And I hope there is no more confusion for you. And this actually brings us to the end of this video. Remember, my videos are for educational purposes only. Please don't forget to share, like, comment, and subscribe as well if you find this video helpful. If you're a returning subscriber, thank you for always tuning in. If you're a new subscriber, welcome to the family. Thank you for watching to the end. Stay safe and healthy. Until next time.